Hi and welcome to another episode of Monday Market Outlook. We were left with a cliffhanger last Friday when the news came out about the PLDT budget overrun. Okay, it's a 48 billion budget overrun. This overrun news carried over onto the weekend. And remember, PLDT's weight in the index is around 3.5%. So as expected, this really weighed down on the PSEI. And if we look at the PSEI chart here, look at the drawdown, right? So we were discussing that the PSEI can most likely move within a range of 6,400 to 6,800, and the next support level will be at around 6,129. So the market opened up very weak today, opening at around 6,366 level, and then bounced up to our support level of 6,400. Now, will this hold in the coming weeks, or will it break down this support level and move to the next support at around 6,122, right? So remember that coming from a bear market rally which started in September, we are now at a corrective phase. We are seeing, so far we've seen 6,400 support level here holding, at least for today. Let's see what the coming week has in store, no? If we look at PLDT's chart here, look at that drawdown. Ooh, right? So we are seeing PLDT support level here at around 6,250, and it already breached that. So the next level of support here is around 1,000. So anyone here wanting to enter into PLDT would want to look below 1,000 to enter. That's a good support level here. You see a consolidation here. It was able to hold itself up very well at this level, but at given that it already breached 1,250, the next support really here is 1,000. And look at that, PLDT wasn't able to fill this gap yet, no? So let's wait for it to go down to 1,000, then slowly buy into the stock if you want. Now the thing with PLDT is that the issue of the 48 billion budget overrun impacts on their ESG scores, right? So what happened, where were the internal controls that was needed to catch this, no? So this will definitely weigh down on the ESG scores of PLDT, along with other probably along with other MVP led issues like Meralco, MPI, and Manila Water, right? If you look at their charts, see MPI, Metro Pacific Investments, it was able to defend itself from it fell as low as 315 and consolidated at 329, which is a quite a strong support level here, no? Let's see if it will able to hold at this level for in the coming weeks, but given the negative sentiment, we'll see. Meralco also, see, not too bad. And Manila Water, there's a normal corrective phase for Manila Water. So it seems like the other MVP companies weren't as greatly affected as PLDT. PLDT suffered a 19.35% drawdown today, breaching its support levels. So I'd stay away from PLDT for now and see how this plays out. We'll know more about the impact of the budget overrun on their financials in the coming days, no? Looking at our defensive stocks, AP, good retracement here. It's a level where you may want to already consider accumulating. We are looking at BDO, also a nice support level here. BPI, of course, the banks, as well as Metrobank. Metrobank is holding on to its 50-day EMA level here, and Jollibee. So Jollibee looking good here, able to hold itself up its 200 EMA line. Let's see if there's a basing pattern that can happen at this level and slowly accumulate here. So again, just reiterating our theme for next year, we'll have to go defensive. Look into the likes of AP, the banks, BDO, Metrobank, BPI, Semirara probably, and DMC, as well as Jollibee is also a good bet. Now on to the S&P. The markets reacted negatively after Jerome Powell came out with a more hawkish stance on the US economy, as well as the ECB rate hikes, no, that happened on Friday, right? But before that, we had some good news to open up the week. The Core CPI numbers came out cooler than expected, which brought the markets up. If we look at the 2-hour chart, we saw a massive rally here after the CPI numbers came out. Now remember, going back to the previous economic numbers, the consumer confidence numbers, the GDPs, temporarily people forgot that the economy is still running hot. So the Fed quickly realigned the markets the next day, coming out with a more hawkish stance. Now remember, the Fed has already reduced its expectation for growth next year. The real GDP growth was initially pegged at 1.2%. Now it's down to 0.5. They are now expecting employment rate to settle in at 4.6 instead of 4.4. PCE inflation 3.1 up from 2.8. Core inflation 3.5 up from 3.1. So the economy is not yet out of the woods, and the Fed has expressed its intent to keep rates higher for a longer period of time, even hinting at the terminal rate increasing by about 25 basis points. No? So if we look at how the market reacted to that news, it settled down quickly here, and then after the FOMC announcement, look, the market quickly went down on that news, right? So this is a classic case of a bull trap, right? So we're seeing the markets supposedly correcting from its trend line bounce. Then a bit of good news pushed the markets up irrationally, and then the markets quickly went down. So if you went in expecting the market to become bullish, you were wrong. You were quickly put in your place, and the market quickly went downhill right after that, right? So if we look at the price action here, we have here the 2-hour chart from the S&P. This is a good support level at around 3,900. Slowly went up because this was the range. It was supposed to fill this gap right here, so it went up. But then the news came out and it caught all the short sellers here, no? So after the Fed news, the market quickly went down and breached the support level of 3,900. The market ended at around 3,800 last Friday, and now it's slowly inching back, no? So the next support level here is 3,750, but here we have a couple of gaps that we still need to fill. There's one here at 3,900 and there's one here at 3,980. So a couple of these gaps, I wouldn't be surprised if the market went up here, or even up to here, then go down to this before going down to 3,750. Now, so we should be careful if you're shorting the market. We're seeing some short sellers coming in here, right? So the short sellers won, but then there could be another trap here where it can squeeze out the short sellers before going down to 3,750, right? So this would most likely be another scenario coming in this week. So be careful here, no? But we are looking at 3,750, and then it will probably do another gap fill at at this level before going down to 3,533, right? So if we look at the longer time frame, if we look at the one day chart, we are sitting in these two vital areas here, but again, we are predicting the markets to go down at this level, coinciding to this resistance level here in back in 2020. So this will probably play out for around 2 months or so, because this if you see all this, if we take a look at the time frame, that's 48 days. This one played itself out in 48 days, right? So we're looking at around 2 months for each of this phase, no? So we are now here, we are 19 days, so we are looking at somewhere around this area here for the next trend line support. Now the question is, when we arrive at that time frame, remember, by that time, that's January 2024, this is going to be an interesting earning season coming in for 2023. We are expecting numbers to go down and see the effects of all of the rate hikes. Critical point in the S&P, if the earnings are really that bad, either the earnings are really bad and the S&P breaches this and goes down further, or the market might actually think, oh hey, look, the numbers are not so bad at all, and then start that rally again, bear market rally again for the next two months. So let's wait for that. So in the meantime here, it will probably go up here a bit before going down to 3,750, right? So are we expecting a Santa rally this year? According to well, traditionally in bear markets, we don't usually get Santa rally. So in bull markets and in normal years, you see here December, here's the Santa rally here. But in bear markets, you don't get any of that bullish movement, right? So maybe the Santa rally is over. Maybe this is the Santa rally, right? So that's it for this week. I hope you find our episode useful. Please don't forget to like this video and subscribe to our channel. So I'll see you again next week. Thank you very much.